This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. On the gold market, we mostly have discussed in our weekly research the retracement up, and we said that until market stands below this area, this retracement up should be treated as reasonable and normal, because here, by forming of this butterfly, market in reality has reached the minor 618 extension of the weekly chart, of the weekly ABCD target. And this 1280.98 area is just the 3-8 reaction on the most recent CD leg. And when the market hits minor target, so 618, just 618 target, the reaction right to the 3-8 resistance is absolutely reasonable. But you can see that market hasn't quite even reached this area, and it has chosen the upper body of this parallel channel that's now is forming to the downside. It's very interesting. Well, anyway, despite how deep this retracement stands, either to this area or to that level, because this level is really huge and hard, rock hard resistance, it's confluence, daily confluence resistance, monthly pivot resistance one, and daily overbought. So this really will be the very solid barrier for gold market. And since market has turned down, this action in fact corresponds and stands in agreement with the normal development of the bearish trend. Why? Because take a look, market has reached the minor target. On the daily time frame chart, it stands in the consolidation, has broken into the downside, and shows the retracement right to this consolidation, to the lower border of this consolidation, just has retested it and turned to the downside again. That is one of the habits of the gold market, to retest the broken consolidations. And for gold market, this is absolutely normal action. Also guys, right now market has moved below the weekly pivot point, and take a look, below the monthly pivot point as well. And that's also points on the bearish sentiment. That's why I can't exclude, since this action in general stands in agreement with the normal bearish development, I can't exclude totally that that could become really the continuation of the bearish action that we have on the weekly chart, with the possible reaching of the deeper levels. That's also possible. The holdings of the Spider Fund also dropped for the more than 4 tons yesterday on Monday. That's also bearish, points on the bearish sentiment on the market, since this is really activity on the spot market. Then that's the investors close the positions in the SPDR fund, and that's also point on some bearish sentiment. Well, also some impact from the Federal Reserve also probably will happen on the gold market, so we'll see what will happen. Now the major question, what we could do in the nearest future. On the 4-hour time frame chart, as market shows really active action to the downside, you can see market already has broken this support area that we have specified previously. That is the weekly pivot point and first fib support 1267. Next area of support will be right here, 1257, and weekly pivot support 1258.65. So that's area 57, 58. That will be the next support area. And I think that we should pay attention to the possible Jordan Napoli directional patterns. Particularly speaking, if market will form the bread butter sell, I think that we should try to do this, because that will be a relatively safe possibility with a very small risk to take it. So if market will form some bread butter sell, we could take the short position, and that could become really interesting solution, because if market will turn to the downside and continue to move lower, and we will be right about the possible reestablishing of the bear trend, that will be just great, because we will get the position very early in the beginning of this downward continuation, then that will let us to get this significant bonus from the downward action. But if we will become wrong, we could protect our position by the break-even stop loss when the bread and butter will start to work, because you know that the target of the bread and butter is the 618 support of the possible bounce from the this support area. Okay, that's why the applying of the bread and butter trade, if it will appear, will be very nice. On the hourly chart, we see that the thrust down is really not bad. We probably could use it for probable bread and butter, but we need to get the significant support at our back before taking any position. We need to get the bounce, and that bounce to the upside probably could happen only from the next support area, and next support area stands right here. So that's why our trading plan suggests first wait when the market will hit 1257, 1258 area. That will be the significant support area. Second, we should wait for the bounce, and finally we should watch for Jordan-Napoli patterns. Particularly speaking, I prefer to get the bread and butter sell here. If we will get it, we will try to take the short position, and let's hope that this will lead market to the downward continuation on the big charts. That will be absolutely perfect. If not, if we will get at least the bread and butter trade, that will be also nice. We will get the scalp profit, or just we'll lose nothing, because bread and butter, the framework of the bread and butter suggests that we will be able to protect our position with this break-even stop loss. So that's our trading plan in the short-term perspective on the gold market. So let's see what will happen. As soon as market will start to form any patterns or show something interesting, we will definitely pay attention to it in our next updates.